All right, this article is coming from FX Empire. Natural gas price forecast. Natural gas markets drift slightly lower. The natural gas market encountered a period of stagnation in Thursday's trading session characterized by minimum price fluctuation. The industry is currently grappling with a significant predicament as the anticipated economic slowdown threatens to diminish the demand for industrial electricity, a key consumer of natural gas. Furthermore, the summer season approaches in the northern hemisphere. Except for sporadic heat waves, demand for natural gas is expected to decrease further. Despite the challenging circumstances surrounding natural gas, it is crucial to acknowledge the considerable sell-off the commodity has experienced, which suggests an eventual rebound is on the horizon. Looking ahead, natural gas is poised to garner attention later this year when Europeans will be compelled to replenish their natural gas supplies, with Russian gas no longer a viable option. This shift is anticipated to introduce heightened market volatility, potentially triggering a surge in price. This article is coming from Barron's. Russian use energy as a weapon. Now Europe can turn the table. So this article gets into ways of not relying on Russia for its natural gas. All right. Russia uses natural gas. Russia uses gas supply as a political tool against its neighboring countries, and the EU has destroyed its reputation as a reliable supplier. Russia's squeeze has had a major and immediate adverse effects. Gas prices surged to over 10 times the normal rate, causing inflation, reduced income and profits, as well as slowing down economic growth. So the article gets into how Europe doesn't have to rely on Russia's gas any longer. Gives suggestions. Says strengthen Europe's gas resilience and independence from Russia. The EU should raise its gas storage target. The current plan is to fill storage facilities to 90% by November 1st. The EU should aim for 100% and count EU-owned gas stored in Ukraine toward the target. Second, the EU should end all purchases of Russian pipeline gas except for through Ukraine. Third, we propose the wider EU should follow UK and Germany and end the purchase of Russian LNG. Fourth, with Europe no longer dependent on Russian gas, it's time to impose sanctions on key Russian gas companies involved in last year's conspiracy to squeeze Europe, including Gazprom and Gazprombank. All right, so this article is getting into multiple reasons, multiple options to get away from Russian gas, and it's the reason why natural gas prices surged last year. Kind of caught EU off guard. This article and the previous article, it's really a case study on supply and demand, right? Now, with gas prices depressed, at least in the U.S., you have the gas rigs counts continuing to go down. So every week, there's a report that Baker Hughes issues on the number of gas rigs that are producing natural gas. And this week it has shot down to 141, down from 152 or 157 a week ago. However, a year ago, gas count was at 146. So the change in the week is a negative 10%. However, from a year ago, it's only down 3%. To make significant inroads into the gas counts, you would have to go back down to the, say, 2001 levels. So that's about another 40 gas rigs coming offline. And so that's the way, again, another example of supply and demand, right? When things are cheap and you want to spark demand, well, you limit the supply. For all these reasons, though, these dynamics that are taking place now, with Mother Nature, and human intervention later this year with Russia and the EU. I'm very bullish on natural gas. Not as a lottery play, but I'm bullish. And many don't know that although the EU was sanctioning Russian gas, what Russia would do is sell its gas to its neighboring countries, and then those neighboring countries would sell natural gas to Europe at an even higher rate. Right? Again, it's all about supply and demand. If demand is getting cut off, um, and there is a need for that. If supply is being cut off and there's a need for demand, the price is going to go up. All right. So what I have witnessed this year is that the $2 level is being defended, and it has been defended multiple times. I'll say in February, a couple of times in April, and most recently in May. Let's just open up the weekly chart to see this. And I'll add another, as I like to call these, smiley faces. Let's clone that. And so you definitely have resistance, and this is the $2 support, and this is the $2 level that's being defended. Now let's go down to the daily chart, but before we do, if prices happen to breach this level, the 150 level is a screaming buy. All right, you got to find money under the mattress or somewhere, and somehow get a derivative play on natural gas. All right, let's go down to the let's expand the daily chart. Now, I am convinced that $2 is the bottom at this point, because we got multiple touches back in this March area where prices were defended. 1, 2, 3, 4. Also, $2 is a round hole psychological number. Confirmation of that bottom, though, will be multiple weekly closes above resistance at 240. But as the article mentioned, there may be a lack of demand from an industrial standpoint due to the economy. If it's cooler this summer, well, there'll be less of a need from a residential cooling standpoint. The X factor is going to be later this year in the winter months in Europe. Now, if the EU cuts off supplies from Russia, well, where are they going to get that natural gas? From the US. The US became is the largest producer of oil. It became pretty much independent due to the shale revolution. And really, the natural gas was a byproduct of the oil. So we have an abundance of natural gas in America, and that's kind of keeping prices depressed too. However, things can change later this year, and my confirmation, as soon as I see it closes above $2.40 per million BTU, that's all I need in order to go long. Now, when we look at the monthly chart, it wasn't too long ago we saw prices at $9, $10. prices are now at, say, $2. So that's at least a 4x from current prices. This area here must signify sellers on a smaller chart, maybe on a daily chart. This is a monthly chart. But just to give you perspective, although these are the most recent highs at $10. In '08, price got up to 13, and '05 price got up to 14. Now I can't see prices getting up this high again, just again due to the shale revolution and the abundance of natural gas in America. But can we get back up to these highs of $9? Absolutely. All we need is a cold winter. Let me know what your thoughts are. Do you think we bottomed? Do you think we can go higher? Leave me a comment. Thanks for watching. Subscribe. Please like the video.